Okay, welcome to a capital hungry breakdown of Dow Jones. So it's been a while since we've done a breakdown on Dow Jones. Let me actually check when it's been exactly. Don't forget, guys and girls, the main feed is a great resource tool especially if you utilize the search function. I'm just going to search Dow Jones, obviously, to see the previous analysis that was done, which was about almost 35 days ago. The analysis was respecting overall bullish structure, looking for retests of 25,580 or breaks above 26,650 to high targets around 28.3K. We peaked around 28.2 or 28.1. So this analysis was basically done. And now we're going to do a fresh breakdown going down from some of the higher time frames, but we already have our key levels mapped out. Of course, the key levels were mapped out using the candle body conjunctions concept on the higher time frames from the yearly, quarterly, monthly candle periods. So we already had those levels mapped out from the crash point all the way up to the previous highs and a possible projection of 30K. So just we're not going to remap the levels. But anyways, what we are noticing fundamentally is that optimism has been holding strong, and it's been holding strong for weeks. Okay, we know for one thing, when we're looking specifically at U.S. equities in the U.S. stock market, smart money in the Feds won't let the stock market actually go to like a full-on crash, right? For example, as soon as price actually did hit the low points of around 18K, they of course called it the circuit breaker, which was initiated on the markets where they stopped the short selling of stocks. Like they literally have the power to inflate and inject the markets with money and even stop short selling. It's extremely corrupt. It's extremely manipulative because you never see them stop the buying of stocks, right? You never see them stop the upside of stocks. And you didn't see them initiate the circuit breaker or stop the short selling of stocks. I was about to have a tongue twister there, so I had to slow down. Or stop the short selling of stocks until it hit these historical low points where it wiped out years worth of financial gains in the stock market. What is that telling us? That if you go back and watch the Transfer of Wealth webinar, it is literally explaining that concept. These Feds, the smart money, they literally have the potential to they could have stopped the crash at any of these points as it was crashing to 26K, 24K, 23K. They chose this previous area of price sensitivity where they knew this 18K crash, and then they hit the circuit breaker. Then they stopped the short selling of stocks. Then the Fed started heavily injecting money markets and printing out more US dollars and supporting the US economy. Then they took all this action, right? Even though they've seen this happen before in 2008, and they know this is how the economic cycle runs. But what happens when years worth of financial gains in the stock market gets wiped out? Where's that coming from? It's coming from the working class people, right? So just to quickly review how manipulative the stock market really is and how what we have seen has been more of an artificial market, right? Because in essence, a stock market, as spoken about in the Greatest Transfer of Wealth webinar, please go review that again as well. Or if you haven't seen it, go watch that. In the essence of the stock market, it should be bullish or strong in correlation to the actual stock strength of like the companies within that exchange, right? And those companies should be, their company stock should be performing well based on the company's performance and just on those simple factors of supply and demand. Where we see things like Tesla is at like $1,800, probably more or less. I'm not too sure. I haven't checked it in a while. A stock like Tesla will be at like $700. Elon Musk will tweet that the stock is too high, and then investors go pump more liquidity into it, and it doubles. You know what I mean? So there's a lot of manipulation in the stock markets, and you have to understand that it's in the control of smart money. It's in the control of the Feds. They have the power to stop short selling if they really want to, which they did when it hit 18K. It just shows you that they have the power to do that, to halt the markets, to stop any more short selling, then to inject it. They have the power to inflate the markets, create these artificial markets. So just understand, you have to understand who you're up against so you can play with them, right? You want to ride the waves with them and understand what's going on. So with that being said, to quickly summarize that, we are seeing a full V-shaped recovery. Today we saw a big Trumpy tweet about how the NASDAQ hit a new record for the NASDAQ, right? So it's ridiculous. This has just been mass manipulation. Coronavirus, in my opinion, is fugazi, just a market mover, a money maker, and it literally took the wealth of millions of individuals around the world who are invested in global stock markets and gave it back to the top percent. And then those are the same people. Because think about it, when this crash happened and everybody got flooded out of the markets, who even has money to go back in at these lows? People already lost their retirement, lost their pension, lost their savings, lost any stocks they're investing in with this massive short selling, right? Guys like Bezos, guys in the top percent, and some we don't even hear about, you hear later that a month before it all happened, they were already cashing out of stocks, right? So who's getting in back at these low points? The same top percent guys. And they're doubling, tripling, just an exponential growth on their overall wealth. And they're setting themselves up for decades, right? And we've seen the same thing happen in '08. So with everything that I'm saying now, understand that optimism is still holding strong. We can't fight the feds. There's been more optimism around vaccine. We're starting to see coronavirus actually start to fade from the markets and market headlines, and seeing headlines more focused on global trade war and global data as well. Of course, it's still prominent. And if there is another outbreak and it leads to lockdowns, then of course we will see a reason for another potential short sell or meltdown if we get a break of this structure alongside those fundamental confirms. But otherwise, with the market optimism, I see the potential to fully correct the downside move and go back to the previous highs and have Dow Jones follow suit with like the NASDAQ in US equities overall, right? So yeah, so now when we're looking at the technicals, we're just going to be starting from the weekly. We can see that the downside move has been corrected, even though it's not as impulsive of a correction. This is a healthy correction in the sense it's very strong bullish market structure. Every single impulsive period had an area of liquidity generation or consolidation before it had its next impulsive move or a pullback to generate order flow. It's printing new highs every time it has its impulsive move, running in this bullish ascending channel. Plus you have the support of market optimism, smart money, the smart money sentiment, and the feds who can print unlimited amount of US dollars to inflate the markets. The only way we would really see a sell-off to visit any of these low points in our current day is if we have a lockdown, if we have lockdown round 2, right? Global lockdown round 2, specifically in the US, and we break this bullish market structure that has been identified here and start to come back below around 26, 25K even. 25K, sorry, not 25K, 26.5 and 26K around this area, right? Without those confirms, there's no real reason to sell US equities long-term or for an extended period. It just looks like right now with how we are potentially peaking a new high point and we're coming to an area of price sensitivity. You can see on the left here, see how every time price peaked, it reacted to a previous area of price sensitivity. And you can see these order blocks. So that is where price is reacting. So I do see some potential as we're peaking into new highs. We've seen this weekly candle already create somewhat of a top wick. We failed to break above 28K a bunch of times. And we have this area of price sensitivity historically that we are reacting to, that we can see a potential pullback phase to retest this bullish market structure, get more buyers in the market, and then possibly continue up to fully correct the downside move and go into that 29K region. So let me just clean some of this up and we'll start zooming in to some of the market structure and price action down the time frames. Otherwise, very similar to the market updates. If you guys have been following along from last week, safe buys would be above 28K. And now you can understand why that we would be coming above this price sensitivity area to the left our key level. And we would after the pullback phase, when we've already created the lower wick on the weekly and tested some better buy areas and had more buy orders generated in the market, continue up to correct that downside move. So you can see we had a very strong impulsive move upside. And this was the last area of liquidity that was generated before we had that upside move from the 26,450 region. That has been the analysis we've been taking advantage of over like the last 20 days pretty much, was this bullish market structure holding, respecting key levels, this flat candle body support, and then on the intraday, we were just riding the ranges up. But that overall extended move was about 1,600 points. So if we come down even 8,000 points to around 26,950, 27K, we would still be respecting overall bullish market structure and just creating a wave like we've seen Dow Jones do many times as it extends to buys, creates a high point, does a pullback, generates liquidity, extends to a high, pullback, generates liquidity, extends to a high, pullback, generate liquidity, and upside, right? Otherwise, if we just have a potential consolidation period within these ranges from, let's just say 27,600 to about 28K, this 1,400 point area here, if we just have a bit of a sideways market, a consolidation and liquidity being generated in that fashion with a failure to break bullish market structure or our key levels, and then if we have an impulsive break to the upside, you can also take safe buys above 28K. Global data has been stronger overall. We're seeing more rebounding in global data. We do want to keep in mind the Fed sentiment in the middle of the week on Wednesday for FOMC, where they might try to bring in some market fear just to give the US dollar a bit of a boost on the global scale. And that can potentially knock equities down from their highs and give us that pullback as well. But overall, global data has been stronger. I know, of course, PMI figures from different countries don't have a direct impact on US equities or US performance at all, but it does keep overall global market sentiment very optimistic if we see PMI figures from the Eurozone, from the UK, and from the US, of course. I think that's next week, the US one. We continue to see that data rebounding, right? Because the PMI figures will show us if there's economic rebound or decline in important areas such as manufacturing, market composite PMI, and services sectors as well. So we want to keep a lookout for that data. Just come here. Jobless claims has been fairly optimistic, and the jobless claims are starting to decrease, where we saw last time as well. FOMC, we just have to keep an eye out for. And a lot of the trade talks that are currently happening, we want to keep an eye on these political tensions as well. But we are starting to see some exhaustion. Price did create that resistance on an intraday perspective below 28K and has failed to break it. But the reason I was saying we can potentially range in this area is we can see this range being created between buyers and sellers, right? Where sellers created this initial intraday low from the extended upside move. And that's exactly where they reacted, where they failed to break the previous high. So that's why if we start to see a break below 27.6K, I could then see potential sell-off or take advantage of that sell down to 26,950. And then otherwise, if you want to wait, I'm looking for the buys at around 26,950 or above 28K. I wouldn't mind to see some market fear and some further exhaustion and price break above below 27.6K, just so we can get better risk versus reward on those buys. We can also take advantage of those sells as well. Because if buyers fail to break these previous highs, fail to break above our key level at 28K, where we know there's that price sensitivity from a historical standpoint, and then sellers break these lows that they could not break prior and below our key level, we know that this liquidity for the time being can be considered sell side liquidity, and we can ride that wave down in the overall corrective phase, right? And then wait for better buys and jump in with buyers after liquidity is generated and go to new highs and follow suit with like NASDAQ up to like 29K, 29.3. For a meltdown, of course, we would need a lockdown, global lockdown, and a break below 26.6K. Or maybe if like Joe Biden wins the elections, but that's like in November, of course. So, you know what I mean? Because, of course, you guys understand the extremely strong bullish market structure. We're still peaking and creating high points. We have no real fundamental fear. We just have some mixed headlines, but nothing that's really causing fear. Look how flat the volatility index has been, and especially on the higher time frames, as it's the inverse of U.S. equities. Look how weak the U.S. dollar has been. This is, of course, on the daily. We've seen most of our risk currency versus safe haven pairs continue up on that optimistic run as well on the higher time frames. So yeah, let's clean that up. So any questions so far, please ask in the chat. One thing I want to note though is there has been a rumor that Jeff Bezos did the same thing that he did before the markets crashed, like in March or whenever it was, where he sold a bunch of Amazon stock. We also want to keep in mind Warren Buffett, he put in more money into like a gold mining company, which means he personally believes that gold value will continue up, which is good to see for the long term as well. That did a lot of news sites are saying that was the reason gold is going up. Man, gold's just been bullish. Like gold is overall bullish and the US dollar is weak. And you know how many mining companies there are around the world? Like Warren Buffett just invested in one mining company. Not even like he didn't even buy a shit ton of gold himself. But yeah, the fact that he is investing in a gold mining company does show that he sees the value of gold increasing. So might be some little rumors, and if we get that lockdown and break this overall bullish market structure, we're going to see a sell-off below 26 point like 650, 26.5K. Otherwise, everything else, any pullbacks or corrective phases to 26,950, if we break below previous lows intraday here and our key level, you can take that sell play down. Just be careful as overall stock markets are extremely bullish, so we can have bounces off any key areas or previous areas of price sensitivity. So you just want to monitor your positions accordingly. And if nothing changes as per the macro fundamental sentiment and optimism continues to hold strong, it will be easier to wait for those buys or let the market consolidate. Once it breaks out of 28K, easy buys to extend as it's continued buyer liquidity. But yeah. So any questions about Dow Jones? Yeah, review the greatest transfer of wealth webinar though. It's a good one. Previous analysis played out for DJ. We pretty much came to the target points. We're just looking to, I'm pretty much sticking with that same bias, just looking and adapting with current market structure and price action. All right, I'm going to take the silence as no questions. No questions. Yeah. Yeah. Biden can't even see or talk. So I don't know. Yeah. Somebody else will take over for sure. Okay. So I'm going to save this and send it over, label this chart. Do I have price alerts here? I'll set up price alert. I know I got one on 28K. I don't know why it doesn't show this, but I'll set up the price alerts and then we'll get to go.